All right, today we are diving deep into a company called Firefly Aerospace. You may have heard it being called the next SpaceX, and wow, has it ever captured the market's imagination. But it's also trading at a massive, massive premium. So is the hype real? Is it justified? Let's get into it.
I mean, think about it. Firefly has already done something incredible, a successful commercial lunar landing. That's a huge deal. But its stock price seems to be telling a story of ambitions that are even bigger. So here's the real dilemma for an investor. Are you buying into a revolutionary future, or are you just paying for hype?
To even begin to understand that price tag, we've got to start with what Firefly actually does. What's really behind all these constant comparisons to the biggest name in the space game.
Okay, just look at the sheer scope of their ambition here. These guys aren't just a rocket company. No, they're aiming to be a full-service, one-stop shop for space transportation. They're launching satellites with their Alpha rocket, they're landing on the moon with Blue Ghost, they're even providing data from lunar orbit. It's the whole shebang. And that all-in-one approach, that's the key to the SpaceX comparison. They are literally mirroring the giant's business model, trying to control the entire process, just, starting on a much smaller scale.
Okay, let's switch over to the numbers. And this is where the story gets really, really dramatic. It is a classic tale of incredible promise on one side, set against some very, very real peril on the other.
So on one hand, the promise is crystal clear. Firefly has proven its tech works with that successful moon mission, and it's locked in some crucial contracts with NASA and the US Space Force. That is a huge vote of confidence. But then, on the other hand, the peril is just as real. I mean, they're up against absolute giants like SpaceX and a really well-established competitor in Rocket Lab. And with only 6 launches of their main rockets so far, they still have a long way to go to prove their long-term reliability.
And this number, this just brilliantly illustrates the promise side of the whole thing. 163% revenue growth in 1 year. That is exactly the kind of explosive number that gets growth investors' hearts pounding. It tells you the business is scaling up and it's doing it fast.
But then, you see this, a net loss of over $300 million in the same year. This is the peril. It costs a truly staggering amount of money to build a space company from the ground up, and Firefly is burning through cash to fund all that growth and R&D. This is the kind of financial whiplash that really defines the company right now.
So you have to ask, how do you make sense of that explosive growth right next to that massive cash burn? Well, you look to the future. This $1.4 billion backlog represents contracted future revenue. It's the tangible proof that the market believes the growth isn't just going to continue, but that it's eventually going to overtake those big losses. And all of this brings us right to the core of this whole explainer. This massive, glaring disconnect between the company's fundamental value and what people are actually paying for its stock. To figure out what a company is fundamentally worth, it's called intrinsic value, analysts use a pretty standard method. They project all the cash a company is expected to make for years to come, and then they discount it all back to what that's actually worth today. And after all that math, the number they landed on was about $10 a share. Based purely on the financial projections, the risks, and the long road to profitability, this is what the models say the company is worth. Right now.
But of course, as we all know, the market doesn't always trade based on a spreadsheet. It trades on stories, on potential, on dreams of the future.
And the market is paying around $33 a share. That's a premium of over 200%. So the crucial question we all have to ask is, why? Why on earth would anyone pay triple what the company is calculated to be worth? And this quote right here, it gets right to the heart of it. That extra $23 people are paying, it isn't for the company Firefly is today. It's what's called an option value. It's basically a bet on the company it could become. The market is pricing in the dream of finding the next SpaceX, but the analysis here argues that it might be seriously underestimating all the risks and just how much time it'll take to get there.
So, what could make that dream a reality? And for that matter, what do the technicals say? Let's look at 2 totally different ways of forecasting the future: the company's fundamental business goals and the story its stock chart is telling.
So there are 3 huge milestones that the bulls are watching like a hawk. First, a successful upgrade to their main rocket, which would be a game changer for reliability and how often they can launch. Second, their next lunar mission could basically give them a monopoly as the only commercial provider of high-res moon data. And third, their rapid launch technology is really appealing to the military, which could mean a steady stream of high-margin defense contracts. If they can nail these 3 things, that high valuation starts to look a whole lot more reasonable.
Okay,
Now let's switch gears and look at the stock chart itself. This is a technical forecast using something called Elliott wave theory, which basically tries to predict price movements by finding repeating patterns in market psychology. Now, it's not a crystal ball, it's not a guarantee, but it does lay out one possible and very aggressive, bullish path for the stock over the next few months.
So what is this chart actually telling us? Well, the bullish signs are pretty clear. The stock looks like it's bottomed out, momentum is building, it's punched through some key resistance levels, but the reasons to be cautious are just as clear. The forecast itself includes a pretty brutal 50% drop before the next big move up. The price targets are incredibly aggressive, and the timeline is very, very short. For this optimistic scenario to actually play out, a whole lot of things have to go exactly right.
So, after we've looked at the business, the wild financials, that crazy valuation gap, and the forecasts, it really all comes down to a choice. And it's not about whether the company is good or bad, but more about what kind of investor are you?
And this slide just captures the two mindsets perfectly. The conservative value investor looks at Firefly and all they see is risk. The fierce competition, the cash burn, and a price that offers absolutely no margin of safety. But the growth-oriented investor, they see the opportunity, a chance to get in on the ground floor of the growing space economy, and they're willing to accept that high volatility for the potential of a truly massive reward if Firefly delivers on its promises.
At the end of the day, Firefly's story is about more than just one company. It's really a bet on the entire future of the space economy. So for any investor, the question isn't just about Firefly's balance sheet. It's about whether you believe in that future and if you think this is the company that can actually make it happen. Now that is a bet worth thinking about. Thanks for joining us.